So there are two main parts to the budget. The first part of any budget is known as expenditure budget, and the second part is known as receipts budget. As the name suggests, expenditure budget is the information on how much the government is going to spend and how it is going to spend. On the other hand, the receipt budget gives information on how revenue of the government will be collected. Ideally, the revenue of the government is collected to meet the expenditures of the government. So, we are just trying to see how the government is going to collect the revenue and how would it be using the revenue. Using the revenue means incurring an expenditure that becomes part of the expenditure budget. Collecting the revenue is receipt that comes part of the receipt budget. Now, within receipts and expenditures, we have further classifications. So first of all, we want to understand what is the classification of government receipts. When I talk about the classification of government receipts, there are two broad categories in which the entire receipt of the government can be classified. First, capital receipt, and second, revenue receipt. The capital receipt of the government is basically any receipt which is related to either asset or liability of the government. When we say it is related to asset or liability of the government, we are, the name suggests, the name capital is always asset or liability. So, whenever it leads to change in asset or liability of the government, it is called capital receipt. Now, because, please understand this thing, because in receipt, there is actually inflow of the money that is taking place. Here I have inflow of the money. It's a receipt for me. So how can inflow take place? Well, inflow of the money can take place when I sell my asset. Or inflow of the money can take place when I go ahead and I increase my liability. Now let's understand what is selling an asset means. So, it can be anything. For example, the government goes ahead and it sells some land, government owned land to somebody. Or the government goes ahead and it sells some bonds to the general public. So some public sector undertakings. So, whenever the government is involved in selling an asset, usually the selling of asset is related to making money. Please don't consider this as, it's a reduction in the asset. Why should this come as part of the receipt? Well, that is because, you have some money that you're making. And if you're making some money, then it has to be part of receipt. The second part of the receipt is increase in the liabilities. When we talk about increase in liabilities, it can be when you go ahead and you take loans. So when the government is taking loan, maybe if I talk about the state government, The state government can take loan from the central government. If I talk about the central government can also take loan from the state government, but the central government can also take loan from the banks. The central government can also take loan from other governments, from other countries. So whenever you are involved in taking loan, well, that is when you are earning money. For now, of course, you have to repay the loan. When you repay the loan, it is an expenditure. But for now, because you are earning that money, it comes as receipt of the government. So ideally, we can say that the government can earn money when it takes loan, which means that there is an increase in the liability. Also, it can earn money when it recovers loan. So, when you give loan to people, it is an asset for you, because I will get money in the future. So whenever you give loan to people, it is an asset for you. Now, when people give back you that loan, when people refund you the money for that, that becomes a decrease in the asset. Because you have been able to recover that loan now. There is no more an additional asset for you. So when you recover the loan, although the asset decreases, but at the same time, there is an increase in the money inflow. This leads to inflow of the money. This also leads to inflow of the money. Similarly, any other asset reduction, like when you sell your, government office, or when you're involved in any kind of disinvestment, you are reducing your investment. All that is leading to a reduction in the asset. But this reduction in asset for now is leading to an inflow of money. And because all of these are related to inflows of the money, they will be categorized as receipts of the government. But because it is related to either either asset or liability, it is a capital receipt. So majorly, we can go ahead and say that a capital receipt is one that either leads to increase in the liabilities or leads to decrease in the asset of the government. Now, the next thing that we have to understand is the revenue receipts of the government. Now, what is the revenue receipt of the government? Anything which is not related to asset or liability. It is not affecting your asset or liability position, then that is a revenue receipt. Like for example, when you collect income tax, when you collect toll from people, when you collect fines from people, when you go ahead and you collect excise duty from people, all these are your increase in the money flow, but it is not affecting your asset or liability. Similarly, when the government goes ahead and pays, the salary to government employees, sorry, that will come in expenditure, not here. So revenue receipt is always related to incoming of the money, but there should be no effect on the asset or liability position of the government. Only then it is revenue receipt. Now, a lot of times the government also invests in dividend, in shares of the public sector undertakings. So these shares give the government dividend. This is also a part of the revenue receipt. Similarly, when the government gives loan, then actually the interest that the government earns on loan, That is a part of the revenue receipt because interest is not affecting your asset or liability position. So the classification of government expenditures. Broadly speaking, again, government expenditure can be of two types. The first type that we have is called as capital expenditure. And the second is known as a revenue expenditure. Now, let's try and understand what is the difference between the two. So, a capital expenditure is usually again an expenditure which is related to either asset or liability. Now, because we are talking about expenditure, what happens is either there is an increase in the asset, because when you increase your asset, you incur some expenditure, or there is a decrease in the liability, because when you decrease your liability, which means supposedly you're repaying the loan, then also there is going to be some expenditure. So what are capital expenditures? Any expenditure that either leads to increase in the asset, like you building a new flyover where you're going to invest some money, or maybe you are giving loan. When you give loan, at that time you are, although there is an increase in the asset, but you are incurring some expenditure. So that's also an increase in the asset. Or you decreasing the liability, maybe you repaying your loan. So although the liability is decreasing, but for that very moment of time, you are incurring an expenditure. Now, as against this, a revenue expenditure is any expenditure which does not affect your asset liability position. So, example of revenue expenditure can be your paying of the, salary to the staff, paying medical bills of the staff, getting medicines for your staff members, getting textbooks for people, then, payment of interest rate. All these are revenue expenditures of the government. So, the two main types of receipts or expenditures are capital or revenue. Capital is anything which is affecting asset or liability. Revenue does not affect asset or liability. Classification of government expenditure. There are various ways to classify government expenditure. One of the way that we saw to classify government expenditure was, revenue expenditure versus capital expenditure. Revenue expenditure, no change in assets or liabilities, whereas capital expenditure was leading to change in assets or liabilities. It was actually going ahead and either increasing the asset or decreasing the liability of the government. There is yet another way to classify the expenditures of the government. And according to this method, there are three main categories of the government expenditure. The first one being state specific. The second one being central sector sponsored. and the third one being centrally sponsored schemes. Now, what is a state-specific expenditure? A state-specific expenditure is any expenditure where only the state government provides funds. There is no direct contribution of the central government. So, take the example of maybe some educational policy which is there only in one of the states. So, supposedly Delhi says, I will provide free electricity. Now, this is something which may be specific to Delhi. Because the Delhi government promised to provide free electricity, that becomes a state-specific scheme. In any state-specific scheme, there is no direct role of the central government. Only role of the state government will be there. The other is called central sector schemes. As the word suggests, these are those schemes which the central government provides entire funds for these. So, for example, the central government comes up and says that I am going to provide you 100 days of employment guaranteed. 100 days of guaranteed employment for every individual. Then the central government will sponsor that. If the central government is bringing in a scheme, if it is a central sponsored scheme, then the complete funds will also come from the central government. Now, the last is called centrally sponsored scheme. Centrally sponsored scheme is one where both central and state government will provide funds for the scheme. So both the central and state governments will provide fund for this scheme. In what ratio? Well, the ratio can be as per the design. Maybe for one scheme, the ratio is 90% by center, 10% by state. Maybe in other scheme, the ratio is 50% by center, 50% by state. So the ratio can differ. But this is one way of, going ahead and classifying the government expenditure. Now let us try and understand what is the difference between deficit and debt. Now a lot of students use deficit and debt interchangeably, while there is a huge difference between the two. There are two main scenarios which can actually happen with any government. Either the expenditure of the government can be greater than the receipts of the government, or vice versa. So either it can be the case that the government had spent 1,000 rupees, suppose, but supposedly it only earned 900 rupees, which means it is spending 100 rupees more. Or it can be the case that the government spent 900 rupees, but it earned 1,000 rupees, which means that it is spending 100 less. If the expenditure of the government is greater than the receipts of the government, if it is spending more and earning less, then the government is said to be in deficit. Usually, we don't write it like this. We do the opposite. Usually, deficit is revenue minus expenditure, and if the expenditure of the government is less than the receipts of the government is earning less. Government is earning more, but it is, consuming less, it is spending less. Then the government is said to be in surplus. The surplus of the government is also revenue minus expenditure. But what will happen is that you will see in case revenue minus expenditure is negative, then we say that the government is in deficit. If revenue minus expenditure is positive, then we say that the government is in surplus. Let us take an example. Suppose I tell you that the revenue of the government is 500 crore and the expenditure of the government is 350 crores. When we find revenue minus expenditure, we get 500 minus 350, which is positive 150 crore. So we can say that the government is in surplus. Now take another case. Supposedly the revenue of the government is 400 crore. And let's say that the expenditure of the government is 650 crores. Again, I will find revenue minus expenditure, and revenue minus expenditure will be 400 minus 650, which will come down to be minus 250 crore. If it comes down to minus 250 crore, I can say that the government is in deficit. So under both the situations, I am going ahead and finding revenue minus expenditure. What is changing is that either revenue minus expenditure can be positive or it can be negative. If it is positive, I am in surplus. If it is negative, I am in deficit. Now, as against this, what is debt? Debt is basically the money that is required to cover the deficit. That's the amount of loan you will need, right? So, for example, if the government is spending 650, but the government is only earning 400, it is earning 250 less. So, it needs to finance this 250 crores so that it can undertake the projects that it wants to undertake. So, the amount of money required to cover the deficit of the government that becomes my debt. So, you can go ahead and say that debt and deficit are equal. Ideally, the concept is different. Deficit is the gap between expenditure and revenue. Debt is the money that is required to cover this gap. So fundamentally, the two things are very different. Now, let us try and understand another way to classify the government expenditure. So I'm again going to classification of government expenditure. One way to classify government expenditure is to classify it as fiscal deficit or revenue deficit. You can also say that this can be a classification of the deficit, that there are two ways to classify the deficit: fiscal deficit and revenue deficit. Let us try and understand what is fiscal deficit. See, basically, fiscal deficit is total expenditure of the government minus total receipts of the government. Now, what are the total expenditure of the government? Well, the government can maybe do a capital expenditure, or the government can do revenue expenditure. The government can do capital receipts, or the government can earn revenue receipts. So when I add all the kind of expenditure of the government, all kind of expenditure. And when I add all kind of receipts of the government, then I go ahead and I come to the point of fiscal deficit. So fiscal deficit of any government indicates the amount of borrowings to be made by the government in any particular year. Let us now go to the next type, which is called the revenue deficit. Well, as the name suggests, revenue should only talk about revenue. So when I go ahead and I find out what is my revenue expenditure and I subtract my revenue receipts from it, what I get is called the revenue deficit. This tells me how much extra money I am spending, and still I am neither building an asset nor reducing a liability. Just understand this thing. Because revenue receipt is not related, or revenue expenditure is not related to asset and liability. So supposedly revenue expenditure is 1,000. Revenue receipt is 800. It means I have to incur 200 more. But even if I'm spending 200 more, I am neither going ahead and purchasing an asset nor going ahead and reducing the liability. So this is worse when I get a revenue deficit, because revenue deficit is spent neither on asset nor on liability. I will talk about these things in much more detail. Why is it more important to first reduce the revenue deficit? Why is revenue deficit more unproductive and that should be reduced? But for now, it's just the beginning of the subject. We have to understand that the government expenditure can be also classified in two main categories. One is known as the fiscal deficit and one is known as the revenue deficit. Budget estimates and revised estimates. The estimates that are presented in a budget for the approaching fiscal year are called budget estimates. So, as the word suggests, this is always for the upcoming fiscal year, approaching fiscal year. Now, supposedly, just understand this thing. Supposedly, I told you that, I'll tell you about my salary. So, supposedly, I tell you that, this month I earned 70,000. And I'm, at the beginning of the month, I got 70,000. And I am planning that I will invest 20,000 in FDs. I will go ahead and I will spend 15,000 on all the electricity bills, housing bills, etc. I will do, maybe shopping for 5,000 and I will go ahead and pay my EMIs of car, etc. for this much. I gave you a complete way as to how I'm going to spend this money. I also told you that, I'm expecting that I will earn some money from the stock market. So I will earn additional 4,000 from the stock market. I told you this in the beginning of the month. Now, after this month ended, at the end of the month, I realized that instead of giving 4,000, the stock market only gave me 2,000. Instead of my bills being 15,000, my bills came down to 17,000. Instead of, me going ahead and making an FD of 20,000, I could only make up an FD of 17,000. So, which means that although I would have planned something, when the month ended, it could be a possibility that, my things did not go as per my plan. Well, imagine if this is the case with the individual, it can be the case with the government for sure. So, what happens is initially the government is going to give a plan for the upcoming fiscal year. That, for the approaching fiscal year, this is my estimates. But once that has, once you start going through the fiscal year, you realize that, this is not the way that I'm spending. Maybe I need more money there. All of a sudden there is COVID. I have to give some money to the COVID victims. I have to change the way that I have been spending my money. Well, in all those cases, the government is going to go ahead and revise its estimate. So, what happens is, for any ongoing fiscal year, based on the performance in the first 6 months, of the fiscal year, the government goes ahead and provides revised estimates, RE. So what is budget estimate? Budget estimate is presented for any approaching fiscal year, while those that are presented for ongoing fiscal year based on the performance in the first 6 months of the fiscal year, that becomes my revised estimates. And always remember that you will be making some revisions to the estimates. It is not possible that whatever you suggested, you will be acting exactly like that. You will definitely make some changes to your budget, and that is exactly what your revised estimates are going to